Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning, so still the early part of the week. We're coming to you from the CNBC TV 18 Motira Rosewal studios. I'm Prashant. With me, my colleagues as always, Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Morning, Nigel. So that's the big question, right, that we're asking. Will the market break out of its range after what we saw yesterday? And I guess the bulls are hopeful that that should happen.
The bulls will be hoping for a follow-through session because yesterday was a very, very good session. On the headline index, the small cap index was the very good performer. So what more did you want on a Monday?
And banks did very well, right?
Sure.
Although the performance I was seeing by the end of the day was not from the stocks like Reliance or HDFC Bank or ICICI Bank, which looked like, I mean, they would fire. They did not fire, but the market fired, which I think is, in any case, good. All right, let's just quickly take a quick look at what we need to start with. So not very much by way of global cues once again. So I think you can wrap it up in a sentence or two. Absolutely flat close for US markets, indices, S&P, NASDAQ. In a way, market is kind of waiting for catalysts on the horizon. There are two things. One is earnings. There are big earnings. 45% of the S&P 500 market cap will report earnings this week over the next 4 trading sessions, remaining 4 sessions. And number two, you got economic data, and a Fed decision as well. GDP and inflation numbers on Thursday and Friday, and then the FOMC meeting, which is going to be next week. So in a way, lots of catalysts, markets in the US not doing very much, not telling us one way or the other which way they want to break out. Here in India, after yesterday's move, the question is kind of emerging once again, is the market resuming the uptrend that we saw from the lows of last month? So we had a very strong 1,000-point up move, a week and a half or odd of consolidation, very quiet markets. And has that ended yesterday? That is the question. I think it's early to say with any conviction that that is the case. We need 1 or 2 days more of strong follow-through gains. We need a closing above the previous high. And that, I think, add confidence. So the Nifty yesterday ended with strong gains. We ended pretty much close to the high point of the day. On the way down, I mean, I think now the level for the market to hold is 17,554. That is a low from day before yesterday. And that should be held on the way down. That is point number one. On the way up, and this is the level that we put out, the recent swing high, which is 17,863. That's not very far away, but 120, 130 points away. But that's the level to take out. A solid close above that, I think, gives us visibility that the market perhaps can do more from here. So these are Nifty levels. On the Bank Nifty, which is, as I was saying yesterday morning as well, there is a divergence. Banks are much stronger as compared to the Nifty. The Bank Nifty has broken above the previous high already. The previous high was 42,603. We left off at 42,635. So just about above that, but it was a close above that particular level. The next target is the 78.6% retracement of the entire fall on the Bank Nifty, which stands at 42,966. Again, about 350 odd points away from yesterday's close. So 42,966 is the next target, above which I think you'll get more visibility. And on the way down, I mean, if you want to sort of put some markers as a support around on the basis of which you want to trade, 42,962 perhaps could be that level. And that should not be breached if there is some selling which starts to emerge, at some point in the day. So that's basically a bunch of things out there for you to kind of track and pay attention to. Not very much from global markets. The market here in India, though, yesterday at least fired on the back of its own steam. Sonia.
Absolutely. So, the one question that's on everyone's mind, right? Will the market break out of its range? And it seems like there are catalysts which suggest that the market could break out of its range. Yesterday, we saw that the foreign selling by FIs have reduced quite a bit. So there was just about 400 crores of selling from the FIs yesterday. This compares to over 2,000 crores in the previous trading session. And on April 20th, we saw 1,300 crores of selling. So in that context, yesterday's 400 crores indicates that perhaps the FI sentiment towards India has improved. It may be too soon to tell, but at least that's one indicator. The DIIs, the domestic institutions, bought in excess of 1,100 crores, so that was a good thing. Now, after ICICI Bank's strong numbers, the stock moving up, there was delivery-based buying as well. A lot of earnings this week from the banking space, and all eyes will be on that. There's Axis Bank on Thursday, there's Kotak Mahindra Bank on Saturday, and the Bank Nifty has made its presence felt. So yesterday as well, the Bank Nifty ended with over 500 points gains. It's now well above the 42,000 mark. So let's see if these, stocks can take the market higher. Apart from that, since I'm talking about earnings, Globally, although the markets were very quiet, all eyes will be on a slew of numbers that come out in the next couple of days. Quiet in the sense there was a tinge of green on the global markets, but now the street will await numbers from Alphabet, Microsoft, Amazon, Meta. All of them will be announcing numbers through the course of the next 48 hours. And in local cues, talking about tech and big tech, there is Persistent Systems that reported a decent set of numbers. So after Mastech, you had Persistent Systems. Almost 4% growth is what we've seen in terms of dollar revenues. The margins were stable quarter on quarter in a challenging environment, and that's something that the street would definitely like. There is the auto space that will be in focus today as well. Bajaj Auto kicks off today. There's Maruti tomorrow. And some of these stocks like Bajaj Auto are at a 52-week high. So I'm going to be tracking that space very, very closely. But in general, the mood is positive. The SGX Nifty is indicating that after yesterday's good run, there will be some follow through today. But it's important to see if that 17,800 hurdle is something that the market can take out.
Well, that's right, Sonia. The SGX Nifty is suggesting a positive start. Of just looking at the Asian markets, though most of them are in the red, which is not such a bad thing because you want the follow-through session to start off a little bit flattish, a little bit lower so you can get in. The data points, though, that are coming in are telling you that this is a buy on dips market, at least in the near term. Yesterday, the Nifty Bank or the banks, they broke out, and the IT index provided some good support. So that was pretty good news in trade yesterday. And the Nifty Bank closed at its highest levels we've seen in the last 3 months or so. The institutional data and the cash market and the FI data and the FNO market, both of them were very, very encouraging. Today, though, the Nifty Financial Services Index, that's the one that's going to be the swing factor. And also, I'll be keeping an eye out on the small cap index because yesterday, that was a pleasant surprise. It rebounded well in the second half of trade. Let's focus first on the cash market flows. The FIs, well, the net sell number that Sonia mentioned yesterday was half of what we've seen on an average for the last 5 sessions. So on an average, it was around 950 crores odd. The institutional numbers, well, that's a net. DI and the FI put it together. They turned buyers because the DI flows were stronger than expected after 6 straight sessions of selling. The FIs in the FNO market, well, they added 10,000 long contracts and they covered close to around 2,000 short contracts. Now the long positioning moves to around 44%. That's the highest we have seen in the last 3 months. Around January 24th is when the FIs were net long on the index. And after that, we haven't seen them come to this level of around 44% odd. So that's telling you a lot of the short covering bounce has been done. And now maybe the FIs are playing for more upside. Now, on the index option side, what stands out is they added longs and they also wrote puts very, very aggressively. Yesterday, they wrote more than 2 lakh put contracts in the ratio of 10 puts for 1 call. And pull up a couple of strikes. The Nifty, 17,700 put, 17,600 put. Between them, close to around 75 lakh shares were getting added out there. So because of that writing that we've seen at around that 17,700 as well as the 17,600 put, now the base of the market in the near term, we have expiry that plays out in the next few days. That's moved up to around 17,600, 17,650. Earlier, we were tracking 17,500 to around 17,550. On the upside, you're watching for the 100 DMA. If the Nifty can get closer to those levels, then you're bracing for a rebound towards that 18,000 odd mark. But I said the Nifty Financial Services Index, that's going to be crucial today. There was some writing out there as well. Normally not very, very active, but today's expiry, 18,900 put, very, very active yesterday. There was some writing being seen. At one point of time, it was more than 100 rupees. So just plugging in those numbers, you get some bit of support at around that 18,785. Watch that level because the second half of trade is going to belong. SGX Nifty suggesting some green. I think at some point of time, you'll get a bit of a dip. You need to participate going by the data points. So buy on dips is likely to continue, at least in the near term.
All right. Now on the SGX, 17,777 is where we are trading on the index at. Well, let me quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. And Matt Orton